Welcome to Drill Down Earnings. We have quarterly results out from International Business Machines, what we call it IBM, as they've been doing for, 100 years. This is the Drill Down Earnings report from Epistrophy Capital Research. I'm Cory Johnson, Chief Market Strategist. And let's get right into these numbers here. We look at the 50 most important companies in technology, and IBM is definitely, certainly still one of those companies. These numbers were a little bit better than Wall Street expected. The stock selling off, so why? Let's dig into the numbers themselves. So $17 billion in revenue, again, better than Wall Street's expectations. $7.5 billion of that was in generative AI. So this company is really modernizing, and that's kind of, the two focuses we have here is what's going to happen in the future, what's happening with Red Hat software, and what's happening with their cash flow generation. So specifically, the revenue growth is kind of hanging in there. It's been a really uneven recovery for this business, but 8% year-over-year revenue growth hanging in there for IBM. We dig a little bit deeper, you can see their operating profits are really steadily improving. 17% EBIT margins for this company. That's a good thing for a company that has struggled for so many decades. I've covered this company for so long. It's fun to have some kind of decent results. Although, like I said, the street didn't love these. So let's take a look even deeper. When we think about IBM today in 2025, it's a software business with a lot of consulting and a chunk of infrastructure. So 44% software, a lot of that's Red Hat, 31% consulting, with the remainder is basically infrastructure. And those businesses are generally doing pretty well. If we dig a little deeper, even deeper, we drill down, in fact, it's called the drill down, why not? There's IBM Z revenue up 70%, driven by demand for the new Z17 mainframe. They say it's one of their best mainframe launches they've ever had with their Telum 2 processor, doing great inference work. We don't think about that company with inference as much as we think of NVIDIA and others, but there we are. Their automation business with their HashiCorp acquisition, the revenue of that business up 16% in the quarter. And they say their pipeline is up 3x when doubling their bookings in the first quarter since the acquisition. Their hybrid infrastructure business up 21%, despite a 17% drop in their distributed infrastructure business. They say their clients are really focusing, moving money into all kinds of AI products. And their Red Hat revenue up 16% in the quarter, driven by strong OpenShift adoption and fighting against Broadcom's VMware acquisition. They think it's created some opportunity for them. Overall, their software business up 10% because Red Hat is cranking so much. Their consulting business, still a concern. I don't know, it was up finally. They'll take that 3%. But, as I mentioned, consulting with 31% of revenues, growing only at 3%, kind of maybe pulling down the growth rate for the rest of the business here. And again, their infrastructure business doing really strong. Their generative AI business, their book of business at $7.5 billion, as I mentioned, up from $6 billion the previous quarter. But their infrastructure business up 14%, really strong for IBM. And their free cash flow. So this is interesting, and we'll dig into this a little bit, but their free cash flow wasn't great in the quarter. It was down. This is their weakest free cash flow quarter every year, their second quarter. But it was down 30% over the weak quarter last year, which was down from the year before that. So they said, however, it is improving. So they put up a not great free cash flow number, but they say it's improving, and they even raised their guidance here. How'd the stock react? Well, the stock market did not like these numbers. The stock was down 5% in after-hours trading, but that's after a 53% rise for the year. So when you've got the S&P 500 up less than 15%, and you've got this up over 50% in a year, it's been a good year for IBM shareholders. But what's going on? Among the things we were worried about this year with IBM was cutbacks in the federal government, Elon Musk and Doge, and IBM is a huge government contractor. What is the federal government doing, and what's it doing going forward? Arvind Krishna, the CEO of IBM, suggested that it's changing. It's not about cutbacks, it's more about efficiency, and yes, adopting AI.
I'll use the word federal as opposed to public sector because in some of our written documents, public includes healthcare and life sciences and others. So I'll use the word federal and government to be more precise in what this is. From my conversations, direct, as well as public statements from various members of the administration, they had a very strong focus in the first 6 months to focus on cost cutting and efficiency to get to what they believed was the right size. They have been very, very clear. Their focus is now shifting to, number one, we need to modernize the agencies in how they leverage technology to provide a better service to citizens and to leverage technology to also reduce waste as opposed to just cost cutting. 2, I was very pleased to see the AI action plan that came out this morning. They are very clear that AI has to be used by government agencies against the goals I just laid out.
So efficiency driven by anything driven by AI is maybe good news for this company, but what's their drill down earnings takeaway? What's the one number that tells you a whole lot? Well, just reported Q2 earnings from IBM, International Business Machines. Your essential summary tells you that they did $17 billion in revenue, a lot of AI business. They said $7.5 billion in generative AI. That gave them 8% revenue growth on a year-over-year basis, a lot better than last quarter. And I promise you to bite the one number that tells you a whole lot. That number was not in the results. It was in the guidance, $13.5 billion in annual free cash flow guidance. Why is that such a big deal? Because in the first half of the year, they only did 5.4 billion in free cash flow. So if they did 5.4 billion in the first half, and they're saying 13.5 billion for the full year, that means free cash flow is going to get better for the rest of the year for IBM. All right, thanks for checking us out at Drill Down Earnings. Check us out on X at Cory TV, and of course, at Drill Down Pod on TikTok, Instagram, and YouTube. We appreciate your time. Please subscribe so you can catch the latest from Drill Down Earnings.